Hello, good afternoon. You're watching Market Fatafat on ET now with me, Vinny Motiwala, along with me, Shrishti Sharma as well. Shrishti, a very good afternoon to you as well. But yes, we did start and managed to see a better afternoon. We did touch the all-time high levels, but as of now, the market seems to have given up those highs. And look at especially the broader markets, they have given up much more of their gains as well. Look at the Nifty small cap as of now. You can see that the Nifty small cap is trading in the red. Nifty also itself has given up those gains, only trading with gains of 0.4%. Small cap in the red, down almost 0.05% as of now, trying to come back to that green side, but as of now, off the day's highest point. Mid cap 2, clear indication that we've seen that fall coming in the market. So we did touch that high level, the Nifty Bank, but from that levels after that we've seen a slight bit of a fall coming in, slight bit of a decline coming in, and that is what we've seen overall coming in for the markets as well. Nothing interesting happening on that front. Other than that, in terms of the sectors, PSU banks, metals as well as autos, those are the ones holding on to gains. Other than that, IT, energy as well as media trading with sharp cuts. Media down 0.6% in trade and among the top sectoral losers as well. Let's look at some of these individual movers. What's holding on in terms of the gains today are the cement names, and we have Ultratech Cement, then we have that is holding on to gains in the Nifty 50. We have Hindalco, Bajaj Auto as well as Tata Motors are some of the other names which are holding on to gains in the Nifty 50. Among the top losers for the Nifty 50, we have NTPC, which is down more than 1% as well. So that's how the market is looking like, Shrishti. From the day's highest point, that fall is coming in. So most of the stocks also seeing a slight bit of a decline there. But a lot of individual movers in trade is what we'll be talking about as well, Shrishti.
Well, yes, absolutely. A lot of counters are still holding on to itself. But during the course of next 1 hour, viewers, we're going to be highlighting all the counters that are buzzing either on the back of the news flow or on the back of the technical. So let's get started in this edition of Market Fatafat. But before that, let me welcome on board our technical expert for today as well as our team of researchers on the technical front. Today we are being joined by Nooresh Merani, and on the research side, Ashesha as well as Ankita are joining us. A very good afternoon to all three of you, but let's start highlighting the counters then. And one of the top gainers in Nifty 50 is Bajaj Auto, so let's put the spotlight on that front only, because DAM Capital has come out with a note where they have gone ahead, though they have maintained their buy rating on this particular counter, but they have hiked the target price from 6,000 rupees earlier to 7,200 rupees now. DAM Capital has earlier as well has given a positive note on Bajaj Auto, but this time what they are highlighting is that the company is doing great when it comes to their growth momentum. They are confident on the continuation of the growth momentum going ahead. They indicate that post-festive the demand is much better, unlike many years in the past, and sequential decline is lower compared to the last few years. Now, two-wheeler industry growth during the balance of FY24 is likely to be in the range of high single to a low double digit, and they expect a positive trend to continue on the back of the upcoming election season as well. That could be sentimentally positive for the industry. Now, the company also plans multiple new launches across ICE as well as their EV portfolio over the next 1 to 2 years, and the new plates are going ahead with refreshers and upgrades on the existing model will fuel the overall volume of the company. And lastly, what they are saying is that the three-wheeler export may take a bit of a longer, but sequentially the exports of the company are seeing an improvement. On the back of this positive note, we are seeing no stopping for Bajaj Auto, still holding on to a gain of 2.6%.
Surely that's Bajaj Auto, but let's pull up the charts for Barbeque Nation. That one is also in focus on the back of a brokerage note that we have from Motilal Oswal. They're maintaining a buy on Barbeque Nation, a target price of 664 rupees per share. And they believe Barbeque Nation is actually among the few scalable businesses, especially in the casual dining players when you compare it to them. They believe that there could be a healthy store as well as economics, and net cash balance sheet is quite good. So that is something that could support the growth for the company. And especially in the last 1 year, what they're highlighting is that the weak macro has adversely impacted the SSSG growth and earnings of the companies as well. But the management has rationalized the stores, and with a steady CFO now in place, it is well positioned to actually comfortably manage to see a 20% growth through internal funding once the market starts recovering. Currently, it's EV to sales when you look at it. It is at 1.4 times. EV to EBITDA is also at 1.14 times of FY26 as well. And if the lowest, it's the lowest in the retail space, offering a better risk about compared to its peers as well. So casual dining is something that will grow out as well, and plus compared to its peers, it's quite relatively cheaper. Better risk reward opportunity is what Motilal Oswal sees for Barbeque Nation, and that is why the stock is in focus today.
Okay, moving on then, and Nooresh, coming to you to understand more on your first stock, that is ONGC. In the past 6 months, we have seen a one-side run-up in this particular name, though it seemed to be having a bit of a profit booking on an intraday basis. But what's the outlook for ONGC in the times ahead?
So ONGC is a stock with a view for the next 6, 12, 18 months. Now, if you look at the history of the company, the price performance has been terrible. The stock has been around this 200 price back in 2015 to 2018. This was the top. 2007 highs also for the stock were around 200, 220. Same is the case in 2010. Apart from a spike in 2014 elections to 300, the stock has not done really well. Finally, after many years of consolidation, the stock seems to be breaking out. The last time the stock was at 190 was in the Russia-Ukraine crisis when Brent crude touched 190 levels. So we've seen a major breakout and a trend change and a relative strength of late. This is generally an indication of a start of a major uptrend. Very similar to what happened with a lot of power companies, we are seeing this happen in oil and gas. So expecting this stock to eventually go above 300 levels in the medium to long term and accumulate at 195 to 210 levels with a view of 6 to 18 months.
Okay, that's the view coming in on ONGC from Nooresh. So keeping an eye out on those levels over there. 300 is something that is possible that one should watch out for as well. Let's move on and Ashesha talk about the cement bag, because all these stocks are buzzing in trade. Among the top FNO gainers, Ultratech Cement is already the top nifty gainer today in trade as well. So what's the main peg for this and why is it in focus today?
Well, yes, cement counters are in focus today. The likes of Ultratech, ACC, Ambuja, Ramco Cements are all gaining in trade today, and this is on the back of a report that has come in from Nomura, and they've come out with a pretty bullish report on the sector as a whole, where they say that margins are expected to improve from here on, led by stronger volume growth, pricing discipline and relatively lower fuel costs that these companies have been enjoying over the past few quarters. They expect margins to expand on account of lower raw material cost. Volume growth, meanwhile, they say that strong volume growth is what these companies reported in the first half of the year, and they expect the trend to continue in the second half as well. As far as cement prices are concerned, they say they are expected to sustain elevated cement prices, and recent industry channel checks also suggest that the outlook for the sector as a whole looks very good. They've upgraded their rating on 3 counters. Ultratech Cement, they've upgraded to buy from their earlier neutral rating, hiked their target price from 9,300 to 11,500. For Dalmia Bharat, also they've upgraded to buy. Revised target price now stands at 2,900. And for Ramco Cements, they've upgraded to buy from their earlier neutral. Target price hiked to 1,250 from their earlier target price of 980. So on the back of this very bullish note that is coming from Nomura, we see all of these counters in focus. Ultratech, Dalmia, Ramco Cements all gaining anywhere between 2 to 4%.
Yes, great moves coming in on all these cement counters. But moving on, once again, let's shift focus to the oil and gas space, because Nooresh, the second stock on your radar is HPCL. Tell us more on that front. Which are the next levels to track?
So HPCL similarly has seen a very strong spike, and like the oil refinery names, the stock from 250 odd levels has moved up to 370, 380. And if you look at a little longer term picture, the stock had topped out around 350 levels in 2021-22. And also in 2019 to 2020, the top was around 330. So the stock has given a multi-year breakout now. And after giving this breakout, the stock has consolidated between 360 to 390, making a classical flag formation in a up move. So in this case, I would expect eventually a breakout about 390-95 levels and go up to 450. So a preemptive buy here with a stop loss at 370 and a target price of 450 in the short to medium term.
Okay, let's move on and talk about stock number 6 for today, and that is SJVN. Ankita, what's the news flow here today? Why is this in focus?
Yes, so SJVN is in focus today. The state-owned company has bagged an order, a 100 megawatt solar project that is worth 550 crore rupees under e-reverse auction conducted by Gujarat Urja Vikas Nigam. Now, this ground-mounted solar project shall be developed by SJVN's through its wholly owned subsidiary, which is called SJVN Green Energy Limited. And according to the statement by the company SJVN, they have successfully managed to back the quoted capacity of 100 megawatt solar project at the rate of 2.63 rupees per unit on a build on and operate basis through a tariff based competitive bidding process that Gujarat Urja Vikas Nigam had carried out. And this project is expected to be commissioned within 18 months from the date of signing the power purchase agreement. And on the back of this big order win, the stock is up and away, up 1.5% in trade.
Okay, moving on, let's shift focus to the sugar stocks now, having sweet gains in today's trading session. And actually, DAM Capital has come out with quite a mixed report in this particular sector, where first of all, they are highlighting that the sugar production is likely to decline, when this production is likely to remain low in the next season as well. Other than that, the pause in the ethanol policy is quite temporary, and in the long run, they see a positive. They are positive on the earnings growth trajectory. But keeping these factors in play, they cut the operating profit estimates by 2 to 8%. But despite this, they are also acknowledging the fact that the share prices of all these companies have also corrected in double digits in the past 1 month. The negatives are factored in, and they remain to have a positive stance. And it's the UP-based companies that are in focus and likely to be beneficiary because of the higher sugar crushing, better sugar recovery, and relatively higher sugar prices. But if we talk about their target prices, then across the board they were seen to be cutting the target prices of the company. For Balrampur Chini, they maintain the buy rating, and target price is now cut to 485 rupees versus 510 earlier. Triveni Engineering, they maintain a buy, cut the target price to 385 rupees. Dalmia Sugar, they have cut their target price to 495 from 540 earlier. And similar is the case for Dwarikesh Sugar, from 110 target price earlier. This is now being chopped to 94 rupees. So on the back of this report, all these sugar counters are in focus, but nevertheless holding on to the gains in today's trading session.
Okay, surely holding on to gains today are the sugar stocks, but also Alchem Labs, that's the one in focus today as well. We have Equirus that has actually initiated a long coverage on this one with a long rating with a target price of 6,295 rupees per share. So that is why the stock is holding on to around 1% of gain. They believe the strong acute business chronic pivot to add momentum for the business as well. And the chronic business is is supposed to be roped in, an expert is supposed to be roped in as the CEO of the company as well. So that is something that will be supporting them in terms of the growth and the strategies that will come in on that front. They expect higher domestic margins of around 650 to 700 basis point over FY23 to FY26. And it's possible that, yes, Alchem, a correction in the PNG prices after Aurobindo's plant commissioning could buoy some bit of a gross margin there. So Alchem is targeting higher growth chronic market by launching products and plugging portfolio gaps as well. The US business is expected to see moderate growth of around 5% of over the next 3 years is what we're seeing, and that is due to the commodities pipeline. But yes, a positive coverage coming in on Alchem Labs, keeping the stock a buzz after Equirus has given a good target price as well.
Okay, moving on then, let's shift focus to the banking major SBI and Nooresh with Nifty Bank hitting at record high levels. What's the take coming in on SBI then?
So SBI has gone through a 1 year consolidation. The stock topped out around the 620, 630 mark in 2022 and to start of 2023. After that, it made a few bottoms around the 500 mark. And then over the last 6 months, it has made 4 bottoms around 550 odd levels. So a classical base formation done. And then on the upside, it gave a breakout above that 600 mark, which was a trend line breakout, plus now into all-time highs. Classically, after the breakout, we are seeing a consolidation happen around that 630 to 660 mark. So a flag formation in the making here. Once we cross 660, we go into the next leg. Ideally, in such a huge cup and handle breakout, the target price should be 750 plus. So expecting a move towards 750 in the medium term. Buy at current levels as well as add-on dips to 620, 630 with a stop loss around 615 levels and a target price of 750 plus in the short to medium term.
Okay, let's move on. And Ashesha, Tejas Networks is the stock that you've picked out for us. Today, as of now, it's trading with gains of almost 1%. What was the news flow that's keeping the stock abuzz?
Well, yes, off the highest point of the day, but despite that, holding on to gains of nearly 1.5%. Now, this is on the back of an initiating coverage report that has come in from MK, where they've initiated coverage with a buy rating and a target price of 1050. The stock currently trades at about 865 odd levels, so they see about 20 to 25% upside from the current market price. They say company is set to execute orders worth about 29,200 crores over the period FY24 to 28. Multiple growth levers are in place, and they see revenues peaking in FY25 and finally settling at 4 times or rather 5 times FY24 levels. They also talk about the growth levers which are in place for the company. Government emphasis on domestic manufacturing and PLI scheme, large spends on BSNL and the Bharat network, increasing demand in critical infrastructure and the India private sector is what makes them bullish on this counter. So several levers are in place for the company. So they've initiated coverage with a buy rating. 1050 is the target they've given. As I mentioned, the stock is off the highest point, but despite that, 1.2% higher in trade.
Okay then, let's focus to the FMCG space then, and Nooresh, all the large caps on your radar, and the next one is HUL. Tell us more, how is the technical setup looking like for HUL?
So in the near term, the stock has been in a very tight range for the last 4 months, bottom around 2470, 2450 levels, and a top around 2600. So that's been the range for the stock for the last 4 or 5 months. And then if we go a little further, the stock had topped around the levels of 2500, 2600 in April and June of 2020. So this was one of the first stocks to actually hit a new 52-week high and all-time high after the COVID crisis. Post that, the stock has given zero return for the last almost 3.5 years. So looks like a catch-up is possible going forward. Out here, the risk reward is pretty interesting, wherein the stock could go back towards 2750 to 2850 levels in the short term. A stop loss to be kept at 2550.
Okay, let's keep an eye out on those levels over there. But let's move on to the next stock. And Ankita, you picked out Vishnuprakash for us as a stock. When you look at it, slowly seeing a very strong up move today, as well as it's at a 52-week high. So what is the main trigger for this, and what was the news flow?
That's correct, Vinny. Vishnuprakash Pungalia, it is up almost 4.5%, and in fact the stock had surged a good 12% to hit a new high level today after the company bagged orders worth nearly 900 crores from Uttarakhand government for the development of a water supply system. Now, one order was worth 525 crores was for the development of a water supply system in Haldwani, and another contract worth rupees 373 crores was for a similar project in Kotwar, and the contract will involve operation and maintenance of these projects for the next 18 years. Now remember, this company had Vishnuprakash had listed on the bourses in the month of September, and already in the last 3 months it has bagged. This is the second order that's coming in. The first one they had bagged in the month of September worth 600 crores, and this is the second order within 3 months worth 900 crores, and since the last 3 months it has given us gains of more than 55%, and today also it is firing in all cylinders, currently up of 4% in trade today.
Absolutely. So keeping an eye out on this one, surely trading with strong gains over there. Let's move on and talk about another company that is Proteinov. This one is in focus as well. After we have a brokerage note that's come in from Aquarius, and Proteinov also is trading with very, very strong gains today as well. 2% uptick as of now. So Aquarius has initiated coverage with a positive rating. Long rating is what they've given. A target price of 1,500 rupees per share. They believe this is a play on the Digital India initiatives, and Proteinov is actually a very good bet in terms of the India's digitalization story. They furthermore say that diversified as well as granular and unity-based service offerings is something that is expected to do well, and they expect new businesses of ONDC, cloud as well as international expansion, something that will be driving the growth from for the company going forward as well. What they're expecting is that over FY23 to FY26, the revenue growth is expected at around 26% in terms of CAGR, PAT growth at around 38% as well in CAGR growth, positive, strong management, good corporate governance, then there is solid free cash flow record as well, profitability of unique play on developments around India stack, and limited revenue share from the government is something that will work out well for the company. So that is why a positive rating coming in there, stock holding on to good gains.
Okay, but moving on then, let's shift focus to the pharma space there, and Wockhardt Pharma is in focus as today we had a word with the management on the back of the recent news flow that the company has gone ahead with a successful phase 3 of one of their antibiotics, and that's for pneumonia treatment, that is nifithromycin. And as we had a word with the management, they say that they are expecting a nifithromycin approval in the mid 2024, and this is to be, they are seeking enormous opportunity in this particular drug. Other than that, two other major drugs that are in the pipeline, that is WCK 5222 is undergoing phase 3 trial and is expected to be completed in the next 6 to 9 months. This could be a big trigger for the company, so we are keeping a track on that. But another drug, that is WCK 6777, that is undergoing phase 1 trial, and it is once a day antibiotic, but it has still a long way to go ahead with their phase 2 and phase 3. And along with that, they also say that given the fact that they have already a collaboration with Serum Institute of India for vaccine manufacturing, Wockhardt is actually exploring this opportunity with another partner as well. The company's management didn't share the name of the company that they are in discussions with, but this will be for a UK facility for their injectable business. So those were the highlights coming in from Wockhardt Pharma management.
Okay, and also let's listen into what the management had to say as well. Then we had Dr. Kurakiwala who joined us this morning, and furthermore, like you were mentioning, so let's listen in.
Nifithromycin just completed phase 3 clinical trial in India, and earlier we had completed phase 1 and 2 clinical trials in US and Europe. Now we will be filing in next few weeks to drug controller, and we expect to receive approval sometime in the mid 24. We have already, as we announced earlier, signed agreement on a profit sharing basis and contract manufacturing with Serum Institute to make vaccines in our UK facility. This is a long 15-year agreement, and we have earmarked capacity for 150 million doses for them. And we expect that the moment they complete a clinical trial for some of the licensing arrangement they have done, and they've identified 2 of those products. So we hope that later part of the next financial year, we may start the process of production.
Let's move on to the next talk. And Nooresh, you picked out JK paper for us today. So in terms of technicals and charts, how is JK paper looking like? In the last 6 months, decent return of 30% as it's managed to give. So currently, would you still look at entering the stock?
So the stock topped out somewhere around 450 levels back in 2022. It had a nice run in 2021-22 with the whole markets, and then has consolidated. Over the last 4-5 months, the stock has made a new range of 370 to 415. There were 4 attempts around that 415 mark in the last 3-5 months. And today it has tried to give a breakout above those levels. That's an indication of a fresh breakout move, wherein I would expect a move towards 450 to 500 in the short term. A stop loss to be kept at 390.
Okay, those are the levels you need to be tracking for JK paper. But shifting focus to India Glycols, then Ashesha, tell us, why is this counter in focus today?
Well, it is on the back of their expansion plans. The stock, in fact, was trading in the green earlier in the day, but has now slipped into the red marginally, 0.4% lower. The company yesterday informed the exchanges that they've successfully added further capacity of about 100 KLPD to the existing grain-based distillery in Uttarakhand. The company also said that the revised capacity of this grain-based distillery now stands at about 400 KLPD and is fully commissioned. So they've expanded capacity by as much as 33%, and that is the reason the stock was in focus today. As I mentioned, off the highest point of the day, 0.5% lower as we speak.
Okay, let's keep an eye on that stock as well. But on that note, we're going to slip into a very short break, viewers. Don't go anywhere, because after the break also, we'll be continuing with more stocks that are in focus.